Hello guys, welcome to Trading X-Ray. Today we will learn about moving average. What is exactly a moving average? Let's see. If we have a closing price of a particular stock of a different days like this, and we have to find a 3-day moving average, then we have to take these 3 and take the average of the 3 days moving average. But as the name suggests, it is a moving average. So the window of the 3 blocks, it moves. Now in the next case, it will change as like this, 2, 3, 4. So this will be a second point of the moving average of 3-day moving average. And for the third point, it will become like this, and so on. These all boxes representing a single point of a moving average. That's how the moving average is calculated, and the price is like this. So what exactly it is showing? It is showing that whenever the price is moving up and the difference between the moving average and the price is big, it always tends to fall back to test the moving average. There, if anything, according to the math, if anything in a number is moving, it always tends to move toward its mean or the average. So the price can't move upward in like this in the rocket style. It always in a swing low. This is the impulse wave, and this is a swing correction wave or a swing low, and it happens actually on the moving average. So our strategy will be buy at the swing low and sell at the swing high. This is the main concept of moving average, because moving average also acts as a support and a resistance. If the price is below the moving average, it may get resistance at the moving average. Now let's check in the chart, you will understand better. As you can see, there is lots of moving average. Yellow one is 5 moving average, green is 20 moving average, then 50, 100 and 200. The price is above all the moving averages. It is doing consolidation at 20 moving average, and whenever the small moving average crosses the bigger moving average, the price moves up like this, and this will create a swing high. But the distance between moving average and the price is high, and price will try to fall back, or moving average will try to go up. In this case, the price is again touching the moving average, and this is the best opportunity to buy, because it also creates hammer. The price has taken the support at the moving average, and when the high is broken of the hammer, we can take entry. We can take entry of at this, and we are getting 24% profit in just 1 week. That's the power of moving average. can see again the price go up and again the price fall back to the moving average. It may be 20, 50 or 100, 200. Any moving average can act as a support and resistance. Now check this. Up, down, up, down, up, down. Always taken average. This is a golden opportunity to buy, and you can enter at any swing low of the particular waves. This is a impulse wave, correction wave, impulse, correction, impulse, correction, impulse, correction, impulse. That's how the price moves. And you can see again the price is moving up and up according to moving average. It is highly bullish. Now we will talk about the strategy of the moving average. The main strategy of the moving average is whenever the smaller moving average crosses the bigger moving average, it gives a big rally. Like in this case, this 5 moving average has crossed 20 moving average, and price is also below them, and just after when it crossed that 50 moving average, just see the fall, 50% fall in just 2 weeks. Now we will check for the bullish movement. Whenever the price, whenever the moving average, smaller moving average, whenever the smaller moving average crosses the bigger moving average, like this 5 MA into 50, you can expect bulls rally. 20% profit in 2 weeks. Well, there is another thing you should consider before taking the trade. But moving averages are very strong, and it can easily show you the overall trend of the particular stock in just one view. For example, whenever the price is below 20 moving average, the trend is down, and whenever it crosses the 20 moving average without touching it, then it means the trend is up, like this.
Now we will discuss about the important points of moving average, like price and moving average will meet eventually. Even if the price is very far away from the moving average, it will come to touch the moving average, or moving average will go to the price. Second point, moving average act as a support and resistance. I already shown in the example. Exponential moving average react faster than simple moving average because it gives more weightage to the latest candle as compared to the older candles. It means the distance between the price and the EMA is less as compared to the distance between the price and SMA. Moving average shows overall trend. You can check it by 20 MA or 50 MA. Moving average shows crossover, shows trend reversal. If a small moving average cross the big moving average from upside or downside, the trend reversal is possible. Higher and moving average period gives high smoothness, because the will be like a flat line as compared to the 20 moving average. 20 moving average act as a swing support and resistance. 50 moving average act as a reversal of support and resistance, and 20 moving average act as a last resort of support and resistance. If the price crosses 200 moving average from up to down, then it means the company has gone to a extremely bearish trend. And if it crossed 200 MA from below, then it means the company is trying to give a bullish trend.
Like, comment, subscribe to get more free educational trading videos. Join our Telegram channel to get free trades.